And welcome to the £5 Challenge. This is where we invest £5 a week into individual stocks which the community on the Sensible Investors Forum can pick, or it's just random ones I find on the market. This is where I can break it down to you and you can find out how you can research and how you can get into investing with just £5 a week. Hello and welcome to the £5 Challenge. Today I just want to try and break down to you what the whole £5 Challenge is about. Now, I've been running a Instagram page called the Smart Finance page, and on there I try and break down to everyone what investing is about. Not necessarily just investing, but finances as a whole, financial independence, retire early, the emotions and the psychology of investing and the stock market, and that's something I'm really trying to get into. But everyone at the moment, everyone can just say, oh yeah, buy this, step to step, but not a huge amount of people actually show you how to start investing and how to become a sensible investor. Now with the £5 Challenge, what I wanted to do is show that anyone can start investing. You don't have to have hundreds or thousands of pounds lying around to just start investing. You can start investing with as little as £5 a week. So for some people that's just not having 2 coffees a week. For me that might be going without 2 pints of cider, or maybe up in London half a pint. You never know because prices are ridiculous. But it's to prove that anyone can start investing with just £5. And with investing there seems to be a huge gap between accessibility and the psychology of getting invested. Everyone thinks that you need a lot of money, but you really don't. Yes, to have these wild gains you might need a lot of money, of £1,000 in the plus, but you all got to start somewhere, and starting's the main thing. And this is the aim of the challenge, is to just show that you can get started with a little bit of money and grow over a period of time. Then the stock market can be risky. Yes, your investments can go up as well as down. You can lose your money, and some investments are riskier than others. But the whole point of the £5 Challenge is for me to take on the risk and for you to learn and understand. Sometimes we get scared because personal finances, we all have our different risk tolerances, and this is where some might be able to stomach the swings of the market more than others. But with my £5 Challenge is I can take on that risk for you and you can learn along the way. Or it's a brilliant way of just dipping your toes into the market. £100 to some people is a lot of money, but £5 a week, it's doable for majority of us. And just doing that, just dipping your toes in £5 a week, it could be into a different individual stock every month, or it could be into a really well diverse world ETF, which is something I really like doing and I recommend, just because of the risk taken on by a all world ETF is relatively low, especially compared to individual stocks, which has much higher risk. Last year I ran this challenge and I was rather successful. Not necessarily monetary wise, though I did have a gain on my account as a whole, but the response I got, especially from women, which was a very good thing. The whole point of this challenge is to show that people can start investing with as little as £5. And there is a stigma almost that people worry, oh, I can't invest, I don't have loads of money. But the response was brilliant, and which is why I have started this again, to try and encourage more people that just dipping your toes in with just £5 a week is all that's needed, whether that be into any kind of funds or stock that you like. You can buy your favourite shares of the companies you like or use, try and get some money back if you got dividends from them, get paid for what you love. That's the brilliant thing, is you can start with little money and you don't know where you can end up. And it's just a fascinating thing because you also understand a lot about yourself. When you go down with it, you understand the risks that you as a person can take. Everyone's different. Loads of people have different risk tolerances. Some people absolutely love penny stocks, which are one of the highest up risks. And then we have the flip side, that people who find it hard to stomach risk but want to be invested, maybe they pick an all-world ETF because that encompasses everything. So there is a market for everyone, and it's understanding you as a person and your tolerances and your goals, because that's the main thing it comes down to, is what is your goal with it. Some people want to have £1 million, others just want to retire early, just cover their bills. And everyone has their own goal. You're not stuck down to when you're investing in a stock market, you need to beat the index, though it's nice to, and it's normally a good idea, otherwise there's no point to an extent than investing in just the market itself through like an S&P 500 or the FTSE 100 tracker. But everyone has their own goals and there's no right nor wrong answer because it comes down to you as the investor. Now with a £5 challenge, I use Trading 212. For me, this is the easiest platform and commission-free platform to use when investing for such a challenge, though this does not limit you to the types of brokerages you can use just to start investing. You also have Freetrade, you have Nutmeg, and loads of other different brokers. And if you want, then comment and I can start to do some reviews of different platforms if you may please. But for me, I use the pie feature. So here you can see each week I buy a new stock, which is either suggested by you, if you go to the Sensible Investors website and suggest a stock that you want to search, or it's just one I pick up. Each week when I buy it, I put it into this pie called the £5 challenge. Do not copy this pie. It's not one for copying. As you can see, the allocations have not been set up properly. This is because these stocks are going to be so random that they don't actually fit my strategy. So for me to spend time trying to organise them and suit a strategy which isn't there, there's no point for me. So do not copy this. But this is where you can see all the different stocks I've got in the past. As well as YouTube videos, I'm also putting up on the Sensible Investors website a write-up. This is where you'll be able to see all my different research, and there's stuff I'll be going over in the videos, such as what do they actually do. As you can see here, you get an understanding of the basis of the company, what they're trying to achieve. Then the next thing we look at is at value. We look at the PE ratio, the PEG ratio, and its performance against the S&P 500. As I said earlier, we try and beat the market. It's always a nice thing. It might not be in your strategy, but always beating the market's nice. Otherwise, you might as well buy an index fund. Next thing is the profit margins. We like to look at profit margins and make sure that they're nice and healthy. If you've got a negative profit margin, for me and my kind of style, I don't like it because I like to see well-grown companies. Though normally with negative profit margins, they're up-and-coming stocks like growth stocks or higher risk penny stocks. For me, I'm a dividend investor. I love dividends just because that is part of my strategy, but it might be different for everyone else. But I am open to researching all different companies. But as you can see here, I report back on the yield, payout ratio, and then how often do they pay out. So not all stocks pay out on the same dates, the same times, or same frequency. Some are annually, biannually, then it's quarterly or monthly. And I believe there is a ETF out there which does weekly. But we should not focus on the frequency of the dividend payments, and we should focus on the underlying fundamentals of the stock. Another fundamental that I like to look at when researching a company is how much debt it has, how much cash it has on hand, and the current ratio. The current ratio is a very good one to look at because what it can tell you is how much assets it has to short-term liabilities. It basically gives you a short-term health check of the company. If it's got a very low current ratio, then there's got to be a worry thinking of where they're going to get the money from. If it's got a high current ratio, that means they've got a lot of assets to short-term debt, but are they leveraging themselves enough? And that's something that we look into when we're looking into stocks. Another thing we look into is the news and insider buying and selling. The news is a very good thing to look at because what it can do is tell you about the future of the company. Are they reinvesting into new companies and making acquisitions? Are they investing into new products and projects as it is? Or are they going to come on to headwinds? Maybe there's something gone wrong with one of their productions or whatever their sector is. Another thing we like to look at is the insider buying and selling. This is a very good way of seeing the confidence level within inside the company. If there's a lot of insider buying, then this shows that they're very confident in the direction of which the company is taking. But if there's a lot of insider selling, then this is a worry, because you're thinking, okay, is the stock price at a high level? Are they trying to cash in on these rewards? Or maybe the company's going in the wrong direction and they're jumping ship, trying to cash in whilst they can. So it's definitely something that we look into. Now, this is the basis of the £5 challenge. Remember, this isn't financial advice, this is just a bit of fun, and it's just showing you how you can look at stocks, and maybe there's other fundamentals that you may not look at, and it might be a good idea too. Now, just remember, leave a thumbs up and subscribe to the channel to see more videos later on. Thank you very much.